Welcome to Brainfood Bytes. I'm Jennifer Harrity-Cantero, Sustainability Director at Sensiba LLP. I'm here today to talk to you about some exciting stuff that is just happened in the state of California. So 2 bills were just signed into law. California State Bill 253, which is the Climate Corporate Data Accountability Act, and then California State Bill 261, the Climate-Related Financial Risk Act. These 2 bills begin to phase in mandatory carbon accounting and climate reporting for companies based in California or do business in California, which is pretty much everybody. So 253 specifically requires companies with over 1 billion, that's billion with a B, in revenue, both public and private, to disclose their scopes 1, 2, and 3 greenhouse gas emissions, both direct and indirect, including all of those supply chain emissions. Scopes 1 and 2 disclosure will begin in 2026, with scope 3 being required in 2027. So you're going to have to start working your way through each of the scopes and the requirements. This means starting to figure out what your specific measurements for your business is, setting up processes and procedures, and probably starting that all in 2024. This is very quickly coming upon us. This is going to impact about 5,000 companies doing business in California, probably more than that when we start to talk about the trickle-down effect. But assurance on these emissions will be introduced in the first year of disclosure. Specifically, scopes 1 and 2 disclosures will be required limited assurance beginning in 2026, then moving up to reasonable assurance in 2030. For scope 3 disclosures, limited assurance will begin in 2030, and it's going to be subject to review by CARB, the database that will be handling all of this, in 2027. So they're going to reevaluate scope 3 assurance in 2027 to see if it's going to go to that next step from limited to reasonable. So requirements for 261 is basically any company with over 500 million with an M in revenue, public and private, need to start to prepare and submit climate-related financial risk reports. And this is reports that cover climate-related financial risks consistent with the recommendations from the TCFD, or Task Force on Climate-Related Financial Disclosure. For example, businesses would have to disclose whether they've budgeted for increased compliance and insurance costs, and quantify potential opportunities and strategic priorities. The first report is to be prepared by December 31, 2026, with reporting then taking place biannually. Now, the impact. As I mentioned, this is going to hit over 5,000 companies, and it's going to hit more than that, because as these larger companies start to measure their scope 3 and they dig into their supply chains, who's in their supply chain, but small to medium-sized privately held organizations. And so these organizations are going to need to have their numbers ready to pass up to the supply chain. So think about a general contractor. Most of those general contractors in construction hit that $1 billion threshold. All of their subcontractors in their supply chain, the electricians, the framers, the plumbers, they're all going to get asked for numbers. And chances are these guys aren't prepared for that. Another one is CPA firms are in the supply chain. So you will have to report your own numbers. So think about that one. Clients are going to be asking for help with this reporting, and accounting is perfect to do this work. So if you're internal CFO, reach out to the accounting firm that's helping you with your company's work. Accounting firms, be prepared for this. They're going to start asking, because measuring and reporting is our bread and butter. It's what we do. And so this is perfect. We just need to up our skill set on ESG issues and carbon accounting. The good news is that there's several courses and certificates now that can help. The AICPA has several courses that look at ESG from different angles and perspectives within the accounting world. And they have an ESG Fundamentals Certificate course that is a great place to start. If you have any clients with foreign concerns and interests, then check out the ACCA's ESG course, which will dive into their new regulations, the CSRD, Corporate Sustainability Reporting Directive. If you maybe have a manufacturer who's got a distribution center in France, then they will need to report. And then for additional information and resources, check out the Cal CPA's Brainfood Bytes page. And frankly, it's coming. No matter what size company, entity type, or industry that you're in, you're gonna have to measure and report at some level. Start talking to your clients now, start talking to your leadership to prepare. And right now, a lot of companies are having budget discussions. Start talking to them about getting money budgeted to do this work next year. It's going to be very important, and they're going to need budget to complete the work. Thank you.